Jose Berlanga joins me here today, and you could learn what his team is up to by heading over to joseberlanga.com. That, of course, is going to be a clickable link in the show notes.
Thank you so much for having me at.
Well, we're going to start things off because you've been in real estate investing for 25 plus years at this point. There's quite a bit of history here, but I'd be curious as to how you found your way and started in real estate investing.
Well, there were several phases. It gradually happened. I had done a few real estate transactions, a couple of acquisitions, and obviously even buying a home. But eventually, when it got more official, was when I started a construction company, a single family residential construction company with my brother, who is an architect. Sometimes businesses happen by accident. Some others are just by design. This particular one had been planned because of my brother's desire to build and develop. And being younger than me, he did not really have the experience of how to start and how to build a company, which is where I came in. So we partnered. We partnered and started very, very small with a tiny investment. We came into an industry that was not very well proven, which was the inner city residential construction in some of the transitional neighborhoods, as it has happened now in all major cities where you saw this transition of older neighborhoods to start being revitalized. We were one of the pioneers in that business without knowing that we were part of a much bigger trend that was beginning to happen, which was people starting to come back into the inner cities after everybody had moved out into the suburbs in the 50s, 60s, 70s. And all of these neighborhoods started getting forgotten and fall apart, dilapidated, a lot of graffiti, a lot of teardowns, a lot of crack houses. And little by little, we started speculating in some of these neighborhoods. The combination of my desire to build a business around it with my brother's design and architectural and construction background, we built a business. Very, very small again, with one little cottage that we built in a neighborhood here in town. And then we went into two and then four and eight and multiplied it into quite a sizable business, particularly for being an inner city. We build a pretty decent sized business, building a couple of hundred houses a year, which for an inner city builder with a scattered type of development, it's rare, as a matter of fact. Not many people were achieving this type of level of volume because the logistical aspects of running, managing, operating this multitude of small developments is very complex. So
Mhm.
you either build a handful of them in an inner city or you become a custom home builder. But becoming somewhere in the middle between a track home builder, which is what the suburbs does, and an inner city builder, which does a handful of custom homes, we kind of got in the middle of this whole thing, and it worked. We reinvented a lot of things about this business, which were extremely difficult, tedious, and exhausting over the years. But we created a business that became difficult to duplicate, and it gave us a niche in this market. Over the years, a lot of players followed and started doing the same thing. Even some of our employees went on their own and started their own construction firms, development firms, and brokerage firms that ended up doing similar things. But, anyways, that's the beginning of our business trajectory.
Sure. Well, with that being said, is that what you're doing still to this day? Are you building single family homes in inner city?
Yes, as part of what I do, I focused on it for a couple of decades, 20 plus years. That was the bulk of my work, but which is what I've always been known for. Most people know me as the developer, the builder. I dislike that description because in my heart, I'm more of an entrepreneur, just a businessman who likes to start things and build things no matter what the product is. So I've been doing that, but I had already been an entrepreneur in a dozen different businesses prior to our construction company. I've been in the exporting business, in the paper industry, the tire business, the auto industry, manufacturing and restaurants, the food distribution, travel business, the construction of plants for the petrochemical industry, so on and so forth. I had a lot of fun doing that. I had my ups and downs, and some businesses worked, and in some I made a bunch of money. In some others, I lost the money I made in the previous ones. You know what a true entrepreneur does. But then I got into this business, and it needed so much of my time and my attention that I got into it very serious, endlessly. Up until recently, the last few years, I began to delegate a lot more, began to again dabble, although I never stopped somewhat participating in other industries throughout the years. But now I'm beginning to do other things that are more entertaining for me. And real estate has become more of an investment to me, an investment vehicle, which is something that I understand very well, as opposed to me running construction companies, which is what I did for so many years.
Okay. So there are particular cities or markets that you currently work in?
You know, very interesting question. I get that asked a lot because to answer the question, the bulk of my work has been in the city of Houston, Texas. I've dabbled in other markets. I've invested in other markets. I've owned properties in other cities and states and even countries. But Houston has been our playground. It has been a growing, non-stop growing city for the last few decades, very aggressively. We have endless amount of land in every direction. We're not surrounded by mountains or oceans or deserts. And every time we started acquiring or going into investigating other markets and start getting into new headaches, we would realize, what are we doing? We have enough on our plate. We have enough to entertain ourselves. And we would get back into our market and continue growing within what it is that we understood. So we stuck to this market. We built in a number of neighborhoods. What we did was to start expanding the type of product, price point, neighborhoods, designs, in all of the different characteristics of our business. We started expanding them within our area, which was easier to manage and to control. So, yes, Houston, Texas has been our market. We've built several thousand homes in the city, plus many other real estate transactions in different sectors of real estate. And there are so many inner city pockets, what we call submarkets, subdivisions within the inner city. I could reside along. We started in Houston Heights and then Shady Acres, Cottage Grove, Garden Oaks, Camp Logan. Then we started going into the Museum District, East End, West End. We started growing that ring uh, into other areas that became gradually the new thing. And we started capturing those, and we started somewhat creating those markets and pioneering in the different pockets that started becoming a new trendy place to build.
How do you identify those trendy places to build, those areas of the next opportunity?
There are several ways to identify them. I break identifying a new real estate market in two. You can be a follower or you can create the market. If you're an entry level builder developer, if you're one of the new guys, you want to follow what the big boys are doing. You want to go out there and see, educate yourself, do some research. Who is building bigger developments, mid rises, new subdivisions, master plan communities, and then try to grab the scraps, the second tier where there's always little leftover lots in the surrounding areas, and start following those. And those are profitable. Just follow them, understand what the bigger companies are doing, and figure out how to incorporate yourself. You can also, I have to admit, we got a little bit lucky because we created some markets. There was a need for home reasonably priced in certain neighborhoods that had proximity to downtown. Now, I've become, of course, over the years, I've developed my ability to envision where the market is going, but it takes years, takes a long time. So the second portion is to create the noise. You go into areas that are somewhat, whether they're forgotten or whether they've never been built. A lot of inner city areas were once commercial, industrial, or simply they're old. and they could use a little bit of renovating. So I start putting some money, what I call saturating. Here's a very good recommendation for new builders, developers. Don't expand too much. Don't spread yourself too thin. I would go into a very small radius and try to acquire several properties within a block or within a few blocks and start changing its environment, start changing its look, its appeal, its attractiveness. And people would realize that the area was changing. And all of a sudden, I would create a little market. And from there, I would start expanding. Instead of building one here and one there, I would consolidate my efforts into one little subdivision or a portion of a subdivision and start growing from there. So that's what you can do. You can create the traffic by finding an area that you think has something of attraction, location, proximity to something of interest, of something of value. For example, we started building next to stadiums, which were very ugly areas here in Houston. But we started identifying that maybe we could build a little bit of a development close to those stadiums, or next to the medical center, which had been forgotten to, or next to some areas that had a lot of shopping. And when we saw the opportunity that something was attractive for one reason or another, we determined that, hey, maybe we need some residential activity for them to have the proximity to those services. That's another one. There are many ways to go around it. Now it's probably a little more discovered, which makes it easier. There's a lot more information out there, but certainly there are still a lot of opportunities. If I was younger and had the same amount of time and energy that I had 20, 25 years ago when I started, I can see and identify so many little pockets that still have opportunities.
You mentioned you were adding different products. Could you kinda go into that a little bit? Are you talking about adding multifamily, retail space? What are you adding? What are some of those other products?
Well, yes, absolutely. I'll start by saying that in the early years of our business, my focus was to become good at one thing, because that is what makes you successful. Not try to be all things to all people, but I wanted to become the best at one thing. And that was a residential builder within a certain area of town, within a certain price point, within certain parameters, styles, and designs. And we became the preferred builder for those areas. Once you master one, now you can start in other areas, in other sectors. We did that also in residential single family. We did not jump from homes to townhomes to mid rises to high rises to commercial to all of the other to industrial. We stuck to what we understood and gradually started into other neighborhoods and gradually starting to go into other pockets in price point. So now let's fast forward years. Once we understood the market and identified all of these weaknesses and strengths that we had, now we began to venture a little bit into more. But now this was excess capital that we started deploying in perhaps buying some apartment complexes, duplexes, rental income, in some warehouses, some industrial. We began more of an investment side of our firm, which now we have, for example, one of my favorite ones, which is risky, single tenant properties, where you lease them the entire building, triple net properties, where you will either build them from the ground up or rent them to a fast food, to a store, a convenience store, call it a pharmacy or something of that, without naming any specific brands, which there's a ton of them. And I love triple net because there are very, very few real estate investments that are passive. Even apartments, even duplexes, even multifamily, they require a lot of time and a lot of effort and management. And there's a bigger amount, a larger cost factor in order to manage those. They're great investments. All of real estate, sooner or later, if well executed, is a good investment. But I love those one or two tenant properties because they take care of the property. They're triple net. They pay off their taxes. They do their own maintenance. They keep everything in shape for you. And that is true mailbox money, which is rare and it's difficult to achieve. The downside is that you don't have a whole lot of diversification in your income. If that tenant happens to leave, to not renew, then now you're going to have some downtime where you're receiving no income. So I don't recommend to do that unless you already have a portfolio of other investments. But I do differentiate real estate into the different types of investments. They're not all real estate is the same.
Just to remind everybody, we're talking to Jose Berlanga. You could go to joseberlanga.com for more information. So, Jose, I can't help but notice that you've done a fantastic job regarding the focus of your company. And us as entrepreneurs, we have a tendency of chasing the next squirrel. Can you talk a little bit about how it grew your business to just stick to your guns and focus and become the best at what you did before you started to stretch out a little bit?
Absolutely. I agree with you. Focus is a key element in success. Achieved a level of success in any activity is when I focused on it and I focus on one thing, and that is it. Every time I start dabbling and thinking I can start running multiple things and spread myself thin mentally, not just physically, but mentally, things fall apart. You can do that once you're an educated, experienced investor and you can start allocating some of your assets in different asset classes. But in the early stages, you cannot build multiple things. Seasoned and experienced entrepreneurs know that starting and building a business requires every single minute and second and cell of your body to succeed. Everything has to be put into it. Not only that, but you have to be very specific in selecting that product, selecting the market. Where are you going with this? What are the differences between you and the rest of your competitors? What are you going to provide as a manufacturing facility or a service provider that no one else is doing? Or how are you going to improve it? Once you refine your plan, understand your numbers, understand your concept, and perfect your product, stick to it because a lot of us try, we make a couple of mistakes. We try to start growing too fast. We start to expand a little too fast without really perfecting our process. But we also want to chase markets that appear to be more profitable at any given point. And I'll name an example. I have done that myself, where let's say I was building entry level homes in the what now would be 400,000. Back when I started, it was $100,000 homes. But all of a sudden, the higher end homes started becoming a very hot market. So we would say, oh my God, we're missing out. We're losing money by being in this market, which is currently a mediocre market. Let's focus on the high end. So we would go find a few properties, build multi-million-dollar houses. But by the time the cycle and our business would be ready to sell those homes, now the market has shifted into a different neighborhood or a different product or back to the one where we were before. So this is a moving target market cycle. Industries move and change just like stocks. They have periods in time when they're very hot and then they slow down. There are even sectors within industries that fluctuate. When you move around, you lose your ability to be there when it's your product and industry's turn. So stick to it, become the best at it, learn how to deal with the ups and downs. Because in most businesses, your strongest barrier of entry are the downturn. I've learned this in every industry. The world is so competitive that the biggest barrier of entry is tolerating the bad periods of time, the bad economies, the bad cycles, kick out everybody else that was not doing a good job. And that's where you profit. So you just stay there, you stick to it, you perfect it. Yes, you might make less money during those bad years, But if you just wait a little bit until it's your turn to profit and benefit, all of a sudden you own the market. I've made more money in every business I've been in when after a bad cycle, because I happen to tolerate. There's a saying, if you can weather the storm, you'll make a lot of money. But not very many people can afford to tolerate a bad period because they weren't responsible during the good years. They didn't save money. They didn't put savings aside. They didn't structure their business. They didn't create a lean and strong operation so that when things get tough, you're ready to benefit and allow everybody to go out of business while you sit around and wait for the next cycle. And then you come in and take advantage of a brand new strong cycle just for yourself. And that's what I've made my money after a horrible cycle because everybody moved on to something else. And you just stick around and wait for it. But you have to be prepared.
So you mentioned that you started doing this with your brother. Is he still involved?
My brother is happily retired. We made enough money, thank God, after a lot of painful experiences and thousands of headaches and setbacks and financial crises and housing bubbles and so on and so forth. And my brother is a much more fun soul than I am. He is a more bohemian, laid back, philosophical individual guy that I am, and he decided to retire and just manage his investments. I've tried to invite him to come back to a few deals, but he's happy where he is. Let's just
Mhm.
leave it at that. I have a little more to continue and to keep going. I continue to run businesses, but thankfully now this time around, finally, after decades, I'm doing it more for the joy of it, for the discovery and the learning experience, as opposed to the need to start or build or operate a business.
For those a lot of people when they start a partnership, more times than not, do you have any thoughts or feedback for people who are considering that? What type of things should they consider before getting into business with a relative?
There are several things to consider when you partner, and they all have to align properly. Recommendation number one, you have to trust each other, know each other, understand each other very well, or it won't work. Number two, you have to balance each other in your expertise, in your areas of understanding within the business so that you can balance each other and help each other on your weaknesses. You try to bring someone who supplements and complements what you do. In our case, he was more technical. I was more business and numbers oriented. So it worked out better. Our efforts weren't redundant. We weren't duplicating efforts. A lot of partners think, hey, we're both good engineers. We were great a coding team, and yeah, that's fine. Maybe you can build that business, but then you need other components within the business that need to be covered. So if you can supplement each other's strengths, that's another one. The respect factor, the affinity. This is perhaps the number one. Although you need to have different strengths within the business, you need to have similar value as to what do you want out of the business? What are your goals? What are your objectives? What is your mission? If you are not aligned with your partner in this particular scenario, and you don't have the personality to deal with the stress and the pressure together with your partner, it's not going to work. In our case, it worked very well, extremely well. I'm very proud to say that in 25 years that we were partners, we never had one argument. We never had one conflict. We never had one confrontation. We went through horrible cycles where we lost it all. We never once pointed a finger at each other. We never found reasons or excuses because he was there to cover my back, to protect me, and I was there to protect him. If you go in with that mentality and give it 100% and have that person and you identify that team, you're going to be successful. But if you don't have those components, you have to be very, very careful. It doesn't have to be a family member. It can be someone that you trust, someone that you identify as someone with right ethics and a right vision and a right mission.
Well, Jose, this has been a fantastic conversation. I'm going to point everybody to your website again. It is Jose Berlanga, joseberlanga.com. I'm going to have that as a clickable link in the show notes. Before we jump into the rapid fire questions, Jose, is there any question or concept you wish we would have covered?
No, no, these are very interesting, fun questions that I enjoy answering. So, no, no, I think we've covered some good material.
What lie do real estate investors sometimes tell themselves?
Oh, that's a fun one. Let me line them up and just answer a couple of them. But real estate investors, we tend to think that real estate always goes up, that it's always a good investment, no matter what sector. And you need to do some research. You need to do some investigating as to what markets you're going to chase. As a developer and as a builder, I think the number one lie that we make to ourselves is to think that we're going to outsmart this business. We don't build enough margin of error within our activities, within our developments. We think that we're going to be the number one purchasing agent and we're going to beat our subcontractors down because we're going to get better prices. We're going to make them go faster and build something faster. We're going to design something more unique and special than everybody else. We're going to build it for less and sell it for more. We are unrealistic. That is a problem. We need to know, no, we're not the best. I need to be conservative. I need to understand my numbers and I need to have a margin of error. The last one that I will say is this is a very popular for me, for builders, developers, brokers, sellers. We are often in denial when things don't happen. I'm notoriously known for not getting emotional about my product. I understand that the market is what it is. I cannot control it, and the market is bigger than all of us. When I have a product and I need to sell it, it becomes a hot potato. When you finish a product that needs to be sold, and the market is not what we think it is, we go into a denial phase, which is I can believe that I risked my money, borrowed money, worked my butt off. I didn't sleep well. I've been through all this stress. I invested 1,000,000 hours to get to this point. And now I have to sell it at a cost or perhaps lose money on it. So we go into a denial phase and refuse to understand the reality of the market and perhaps reduce, let go, get rid of it, move on to the next one. And God forbid, maybe I'll make money on the next round. We lie to ourselves, thinking that no, if I wait a little longer, I'm going to make money. And statistically, when investors wait around without making money, their carrying cost starts drowning them within the business. So, one of my characteristics was always when the product needs to be sold, when I build a development and it's ready to go, if I need to take a hit and sell it at cost, or make less than I projected, I skip the denial phase, move on to the next one, and
If you could go back in time and give your younger self one piece of advice, what would it be?
to have more confidence in myself, in my ability to perform and execute a business. I've been a warrior, which I always invite. Being a warrior, most people see it as a liability. I see it as an asset because it forces you to pay attention, to work harder, to make decisions, and to get things done. But I would have had a little more confidence that things are going to be okay, even when they're not. Even if they go wrong, I'm going to figure it out and I'm going to move on to the next deal and I'm going to live to see another day. I spent too much time in my youth thinking that I wasn't going to make it. So I would stop worrying because life has a way of figuring things out. So don't worry, but do execute, do things. Now I cope with worrying by doing things, by knocking things out of my list of things to do. That eliminates my stress, eliminates my anxieties. Instead of walking away and leaving things for tomorrow, my number one medicine against worrying and anxiety is to get things done, as many as I can within one day.
Do you have a book recommendation?
I've been busy writing books. I'm on my third book. Here's my first one, The Business of Home Building. And I've been consumed by, I'm enjoying this process. It relaxes me of writing ideas and concepts and experiences. My second book is about to come out by the name of Dirt Rich, which is not necessarily about money or building wealth, but it's about land investing, land speculating, land development, and how land plays a fundamental part of this business in everything that has to do with real estate. It all starts with the right and proper selection of a piece of dirt. And so, anyway, I've been writing and enjoying it. Now I'm in the middle of writing a book about entrepreneurship, about starting and building businesses and having the mental frame of mind in order to get through some of the adversity that entrepreneurship brings.
And lastly, what single strategy, process, or tool have you implemented that has had the biggest time saving impact to your business?
Wow, that's a great question because I don't believe that there is one. I think that there are compounded actions, a number of things that have to align and work together. Other than the ones, I will name one because obviously persistence, endurance, tolerance to stress and tolerance to pain and tolerance to long hours and focus and all of those that we already know. But I will give you one that does wonders for me and that I owe any level of success to, which is the word expediting. Expediting. Entrepreneurs, and I feel like writing a book about that word. Entrepreneurs and successful people, all they are efficient expediters. They know how and when to follow up. They know what are the needs and what are the people and the items that you need to be on top of every day for things to move forward and not get stuck in any part of your process. If you become a good expediter, you can build incredible things. There are many words that I love in the world of business, but I'll leave you with that one because it's one of my favorite ones. I'm an expediter by nature. I'm not the smartest, most brilliant. I'm not the most creative. I'm not many things that you need to have. I'm just a good person to follow up on things. I don't wait until tomorrow. I'm following up on everything and everyone every single day.
One last time, joseberlanga.com. This has been fantastic, Jose. I really appreciate your time, and I hope you'll consider coming back again sometime soon.
Thank you so much for having me. I hope we do it again.